The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
A little slow on the pickup. So what do we have today? A little bit of a reversal out of that pop yesterday, not unsurprising. The market has especially in these counter trend moves, if you believe that's what this is, and I think that there's at least some reason to think that that is what it is. You get kind of the same thing every day for a while, and that is everybody piles on short during the day, and then you kind of get a little reversal at the end of the day. So to me, it's going to be the end of the day that is much more important than the roll from the beginning of the day. But my guess is we have a lot of people shorting this market. Even if we close down 5 or 10 points, not a big deal in the pop that we had over yesterday. So it's just a market that you want to be very careful in and keep your risks well defined, which you can do with options, other things too. But we will continue to keep a close eye on what's going on. But you know what? My guess is we are going to have something that I brought up in the den earlier this morning, is something I learned early on, which is the rule of alternation. So we'll talk about that today and what it means for us in this market. But for the most part, not a lot happening that's going to change my world just yet, but we'll keep an eye on it. In the S&P, we're off 9. The Dow's up 9. The Nasdaq's off 92. We've seen a huge attack on some of these bigger stocks from Microsoft. The reversal on Red Hat is fairly breathtaking. We'll take a look at that also. But let's get a little history going on, and we'll talk about stocks.
And it's all just a little bit of history repeating.
I don't know why someone says I'm short Tesla. I am not short Tesla. I just think that it was going down. I'm actually just doing some other stuff. Anyway, what do we have going on today? And that is, just this little slide. So we'll keep an eye on it. And for history, and 1905 is the first day that we use fingerprints in crime fighting. The neighbors of Thomas and Ann Farrow, shopkeepers in South London, discover their badly bludgeoned bodies in their home. Somebody does, I guess. Thomas is already dead, but Ann was still breathing. She died 4 days later with ever giving up and regaining consciousness. The brutal crime was solved using a newly developed fingerprinting technique. Only 3 years earlier, the first English court had admitted fingerprint evidence in a petty theft case. Farrow's case was the first time that cutting-edge technology was used in a high-profile murder case. But there's one big problem, and that was that they never did any surveys or tests on this. They just kind of said what the results were. And it's interesting because this is a great statistical inference case. We'll talk about why, but starting in the 1930s, the FBI just outright lied and did so all the way through 2010 in saying that they had done studies. They had done no studies. The truth of the matter is that fingerprints, on average, your fingerprint looks like if you got 1,500 people in the room, you'd probably have something that was so close that humans and probably even computers could not tell the difference on. although it was supposed to be, millions. It was actually quite different. Statistics are a kind of a good part of the stock market because they will let you know what's true and what is not. But in probability theory, there's a thing called the birthday problem, or the birthday paradox, and that is the probability of how many people do you need in a room before you're going to find one person with your same birthday. And if you have what is it, 70 people in a room, there's a 99.9% probability that you're going to have somebody with the same birthday in that room. 365, but only 70 people, but yet you still have a 99% probability that one person will have your same birthday. If you have just 23 people in the room, you still have a 50% chance that one person was found that would share your birthday. So it's pretty amazing that how statistically blind we are, and especially in the case of law, how they use that to hoodwink a lot of jurors into believing something that quite isn't true on the face of it. And almost every case now comes in front with somebody, with a statistician to actually tell you what the truth is. There was a gentleman, I think in 2006, who was an attorney in Seattle that somehow got linked to a Madrid bombing, although everybody knew he was in Seattle. They put him in, threw him in, and took him to Guantanamo, only to find out that he had nothing to do with it. They shared already a fingerprint that was fairly close to one of the bombers down there. In 2010, we had a big case in England where one of the police women there was actually linked to a murder by her fingerprint, although she was on the job on the other side of town during that period. We find out now that truly, if people were looking for it, fingerprints are not that rare. They're rare enough, 1 in 1,500, but nothing like DNA. But guess what? Everybody says DNA is only one person's going to have DNA like you. The answer is more like you share probably DNA, almost not definable difference with 4 people on this planet that are living now. So just be very careful when people get into statistics. A lot of time it is a lot of who shot John. The people have no actual academic rigor, which is the word I was looking for earlier, Basil, academic rigor on doing any of this stuff. And just be if you ever become a juror, just know that everybody spouts a lot of things. You got to use your own brain because they pretty much play fast and loose with statistics. And why everybody thinks that you solve crimes with CSI, guess what's the first part of any police department's cut? It's all that CSI stuff. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Early on in my trading career, a lot of people were talking about a thing about Elliott Wave. I dissected it, worked on it for a while, tried to figure everything out that everybody was telling me, and for the most part, I figured out that it was a lot of hooey. Everything kind of only worked for 99% of what they did in retrospect. It never gave me a good signal beforehand, and we were constantly trying to figure out where the waves were, and the waves were always getting recalculated, and it was basically an impossible system that I could ever figure out to trade, although they pushed it fairly hard. There was one thing in all of that, and again, you know, if a clock is stopped, it's right twice a day. There was one thing that I liked in all of this, and it was a thing called the rule of alternation. And if the market goes straight down, I mean, if you can put a ruler on it, and just, you know, it doesn't vary, you just go straight down or go straight up, either one. The next move, the what a lot of people would call the B to C point of an ABC, tends to be very violent or choppy. And one of the persons I listened to a lot when I was developing my sea legs for the stock market was it Tim Ord. He had kind of a theory out here that he liked this rule of alternation. I looked at it a little harder, and basically what you come to find out is if you're in markets like we saw where the bottom just falls out, goes all the way down on Friday, what you want to be doing is always kind of moving, tightening up your stop a little more, because when it does move back, generally that's it. You don't get small moves back higher in a market's being flushed out. But after that, you're going to see a market that tends to have a very different character than that A to B leg that you had. That B to C tends to be, if it was choppy on the way down, tends to be more well-mannered on that B to C leg. So one of the things I do in setting up my stops is know that if I had a straight down move that was clear and precise, that I plan for a very choppy B to C leg in that. And as part of that, you got to make your stops a little bit wider. You also have to be prepared to live through that B to C. A lot of people choose not to trade it at all, which is a perfectly valid position always. Far too many people put on far too many trades, and that's part of power law. You will find out that if you do any of the data that's been turned over by big broker dealers for retail traders to colleges, not with your name monitors, Social Security, just the trades they put out, just about everybody, including the big guys on Wall Street, 80% of their returns will come from 20% of their trades. So if you know how to get rid of those 80% of the trades, you can have a fairly decent life. It is those 20% of the trades that make 80% of your profits that you're hunting for. And any that you cut down, generally, just the law of averages is going to be one of those that was a loser trade or didn't do very well to begin with. But just a thought out there as you're setting your stops. Just be very aware of what you have going on. In my opinion, these B to C legs are an awesome place, especially if you're trading against a weaker market or a very strong market, is a very good place to take options positions because you've got very fixed risks. And it's just something to think about as you go forward in the near future. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. So we're going to go to start looking at some of these charts. And one of the reasons why I suspect that we're going to get back up into the 2700 to 2720 level probably, and it may even take to the third week of April. This may be one of the lowest, painfulest moves higher in a long time in this market, where we've had the kind of action that just seemed to jump out at a trader. But we'll take a look and we'll start seeing what we're talking about. The first thing, and I talked a little bit about it yesterday, but I want to bring it back up again today, is know where your confluence lines are and how strong they are. Here's a good example. This is Air Lease. AL is the symbol on it. But if we take the three major trends out of this, which is the January 29th high at $50.70, the February 23rd high at $46.83, and 2 days ago's low at March 23rd at $41.60, you can make two different Fibonacci retracement levels. You take the 618 of one to the 382 of the other one, and you look for a little combination, which is a very narrow range. In this case, it's 17 cents, 18 cents maybe, 25 cents. That's about right for that. I'd look for like 0.5%, nothing more than 1% of the stock price. So for this, it'd be about $2 at the widest, but I don't even like that. This one is they're going to be better ones, but this is going to be a good example of how narrow. I'm pointing at this little range right now with my mouse pointer to 44.83 to 45.09. So what is that? It's 27 cents. Okay. So you want to keep an eye on that. What else do we have? Okay. Let's take a look at another one, BGG. This may not be one that we're really talking about in the way of retracements, but it was one that was very interesting in the way that we're looking at lows. And this one did kind of come in fairly nicely. Briggs & Stratton, of course, makers of lawnmower engines, $21.16 was 650,000 shares on February 9th. We pierced it yesterday with 206,000 shares. Is that right? Yeah, 206,000 shares. You're kind of going sideways out here today. This is one of the ones where I like it a little bit. The energy off this February 27th high was not all that exciting. And, of course, people buy mowers in the summer. And not a bad-looking chart out here if you just want to go for a little bit of a run. But a lot of times, if the market's not doing well, the most you can hope for is the previous high, and that would be basically a $2 trade or about 10% profit. So I would probably pass on this, not that it hasn't made a fairly decent low, but the upside profit, the reward part of risk reward is not enough. We'll go through a few more of these and kind of look at the way I think of these trades when they're setting up. Again, you can email me at path@tfnn.com. Call me at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, it seems to me the siren seems to be the hardest word.
Well, we're now off 13 points. So this market is rolling pretty hard. Very interesting to be up, to see 10-point whims in the S&P 500. Facebook, our official theme now is sorry, seems to be the hardest word. The Cambridge Analytics engineer was on in front of the Parliament of the UK. Kind of a crazy dude. I'm going to say McAfee crazy, if you watched it. Pretty nutty dude. Did come up and say why he decided to blow the whistle, and it wasn't because in 2 presidential elections before they helped out. It was because he didn't like the guy that they helped out the last time. So again, we know that this has been an ongoing thing. The only reason it matters now is someone didn't quite like who they helped. So is it a lot going to happen on this? I don't think so. But the biggest thing is we've got a market that's kind of weak, and everybody's more than willing to pull the trigger and shoot first and ask questions later. Going to see that in some of the tech stocks today. This got to 162.85 before it rolled down, and what is it after now? 153.60. This is probably a special case. You had huge energy on the way down. You're going to have a lot of people snapping it back up. I was thinking we'd probably get to this gap, which was about 167. I think that there's still an opportunity for this thing to bounce, but we'll have to get through hearings on this side of the channel. But Facebook, being a fairly big part of the NASDAQ, is always going to put a lot of weight on the rest of them. Microsoft had a nice pop here the last 2 days and kind of rolled over. You don't quite have dark cloud cover, but it certainly doesn't look good. The one thing that I can say in almost all of these so far is the volume is pretty light. If we look at the volume today on this push down so far, it's just 1.7 billion shares on the NYSE consolidated tape. You'd want to see something like probably 2.2 to 2.4 billion shares. If we look at the CBOE's market summary report for all volume, we've had 9 million shares, or 9 billion, excuse me, shares, and right now we got about 4 billion shares. So whatever you're thinking here is whether or not you're looking at this as a glass half full or half empty, I can tell you that the volume is half empty today. It is not the kind of big move out here on higher volume. Now, some people might say, well, we went to a higher high and we've pulled back. Well, we kind of already did that. To me, this is generally the kind of market where you see people heavily shorting the market, and then you get big whipsaws, which would further and kind of more feedback into my belief that you're going to see a lot of chop in the markets in the near future. So what else do we have going on out here? I'm going to take a look at a few other things. Microsoft kind of big on that. I'll take a quick look at Apple. You got kind of the same thing, but again, with an hour and a half left, you're going to need a lot of volume to really make this look like something. Now, again, I'm not going to put too much in a single day, but let's take a look at the retracements. You basically got your 50% retracement of all the move down in Apple today. So my guess is that a lot of people thinking that it was time to short probably went right after that 175 level in the markets, and that's where everybody's been pounding this today. But again, if you come up with lighter volume today, you can make a case either way. You need something very clear, and I do not see that yet. One of the other things that we've been talking about also for a while is the fact that liquidity has been horrifically bad. It started to get a little better last week. It was semi-okay through Monday. It's back and pathetic right now. So do not be surprised to see the kind of wild swings from positive to negative There just aren't that many people out there, at least in the futures. My guess is that's also true in the rest of the market. We're going to see a lot of people pounding on this market because it's kind of easy, at least in the very short term, to move the markets. It's a little tougher in the long term. NFLX, we'll look at the rest of these FANG stocks. Now, this one truly does have dark cloud cover, just looking at it now. Now, it doesn't get the wick, so you're kind of close. But let's take a look at this volume. It's slightly higher. Got 7 million shares compared to 12 million shares yesterday. So I think we're seeing a lot of people, they saw the market come down, they're going to hop on this thing. And the question is much more about the close than it is about what's going on now. If we start seeing the market move up into the close, get ready for fund buying, which of course really starts on Thursday. So we're just kind of 2 days away from it. Normally you're already getting in the part where the markup for the end of the month comes. You know, anybody that's putting their money in 401ks gets it dumped in to the 401k at the last couple of trading days and the first couple of trading days of each month. And they're not big fans of giving a sucker an even break if you don't have a choice. So you'll keep an eye on it. Red Hat, RHT, came out with very good earnings. And in that one, we're seeing this thing give a huge amount back. Earnings were great. The only thing that really happened was I suspect that a lot of very nervous people thought, hey, I'm going to just take my cash now. Earnings were good. Everything looked good. We got to 167.36 on 7 million shares. So you spike this thing with fairly high volume. If you can catch the retrace on this for a test of 167, there may be some juice in that trade. So we're off 9 on the S&P, up 13 on the Dow, off 102 on the NASDAQ, which is where most of the heavy selling is going. We'll see how this end of the day thing moves. Question about the TLT from John, and my thought that it was going to go test 116. Well, guess what? The Treasury is going out for $300 billion this week. I'm going to say that again, $300 billion of borrowing this week. And you've got this thing kind of moving. Now, there isn't a lot of volume here, but at the same time, my look to go down there and test this 116 level again, I suspect still is good, but it may take a while now with the Feds going after all the cash in the world. Put down a movie, all the money in the world. Last. We'll be back after this. Give me a call, 877-976-64.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And markets can remain irrational a lot longer than you can remain solvent. So you want to keep your stops in. But I'm not going to get too upset until the end of the day about the prospects for higher prices. As I've said, in fact, do I have it up here? I do not have it here. Give me just a second. One of the interesting things would be looking at what option market makers have been doing, and they haven't gotten freaked out. What they've been doing is selling puts over the last few days. And in that part of selling puts, they've, do I have it here? Is that that in there? Yeah, this is the option data. Okay, let's take a quick look at the SPY. Okay. We'll zoom this out a little bit. Nothing's much changed. For the last couple of days, as the market has gone lower, we've pretty much seen the market makers continue to sell a lot of puts to the downside. That has me thinking that the timing is probably something like late April to maybe the 1st of May before we see the next big move down, if that even is possible. We'll have to see how the volume develops on the way back up. But right now, we've had the short plop. We've had the quick move down like in an airplane. Well, I can't think what that, I want to call it, yeah, air pocket, right? Hit an air pocket while you're out there flying around. So we hit that air pocket, went down straight. Now we're starting to try to move back up. Well, did the option market makers freak out? Did they start moving everything down? The answer is no. They're pretty much looking for something in the range of 272 on the SPYs for that. Now, do they tend to move very quickly this far out before expiration? No, but I probably would have seen at least a little movement, and certainly some of the movement in other stocks, and I haven't seen it. So my thought is that we could certainly get back up to 270 on the SPY, or maybe even a little bit higher if people continue to short this market. At some point, they're going to quit shorting the market, and that is probably, if you're a bear, where the next leg would go down. But this is kind of telling us that we go out all the way into the 3rd Friday of April without it. Now, we've had some pretty big moves down and even tops in the first week of May. Maybe that's sell in May and go away comes back this year, but I'm not a avid bear at the moment. Neither am I rampant bull. I think I'm rationally optimistic that we're probably going to go a bit higher, probably on lighter volume, and then that sets up the C to D leg lower. Okay, what else do we have? We'll go back and look at some other stuff. One of the better looking charts in the market right now is Wayfair. This thing did gap down on heavy volume on the 22nd of February, made a high volume low back at 68.50 with 11 million shares. We've broken that, gone down to 65.86. No signal yet to buy this. Energy about the same as the way it was up on the way down, except at these lows, where you're basically doing 2 and 1 million shares compared to that 11 million share low going back to February 23. Now, here's what I want to point out. You get a great chart like this, you want to find out where that confluence level is. This one actually, if it turned around, would be rather interesting for the move higher. The reason why I'm saying it is a lot of these confluence levels are not that much higher. This one is. You're down at 65 bucks. Confluence level on this one is 79 bucks. Now, again, you haven't really set up any kind of signal that says this is going higher. On a lower day, you do have lower volume. We've got, what, 1.4 million shares compared to the 1.9 million shares yesterday. That's all part of this 68.50 level. If you were going to play the equity, what you would want to be looking at is the ability to have this close back above 68.50 with continued light volume. And then the play would be to 79 bucks. Not a bad play, 14 bucks on a $65 stock. That would start to interest me. Just no real big signal yet. Okay, let's go back and look and see. Okay, now we're off 12 points. This thing is all over the map. Okay, what do we have? Okay, down 112 on the NASDAQ, 116 on the NASDAQ, off 14 on the S&P, up 14 on the Dow is the last tick I have. We'll continue to keep an eye on that. Oh, now it says the Dow's down 33. Maybe that makes a lot more sense. It wasn't updating for some reason. Okay, got a question to look at the IBB. Do a real easy one on that one. This 105 area has been fairly decent support. You got and bounced off of it the other day. Volume is moving down on fairly light volume, 1.22 million shares compared to 3 million shares on the upside yesterday, and 3.4 million shares to the downside the day before that. When you look at the candle of the 2nd of March, you were looking at 4 million shares. So certainly a lot lighter volume coming out of these sidelines. The question is whether or not you're going to go back and retest the spike that lasted all of, that Friday, what did it last? 2 hours, 3 hours, to get down to 101.02. And I don't know if there's much else you can say about it. Again, you can email me at path@tfnn.com. We'll check on it. Got another one. So the question is, what would I think about the Facebook July 120 puts? I think that you're way out far on those. Again, I would speculate, or I am speculating, that we get some kind of rally back into those 2,700 levels, even if it's light. And that may put enough fire under some of these stocks and purchase under these stocks to get you out there toward April. And my guess is that this market will probably hold up through that April expiration, which is the 20th. And what you're looking for is probably that last week or so of April to, at least that's the way I think it's lining up now. We could get hit by a meteor, but in the ability not to see any of those rare occurrences occur, I continue to think that everybody's going to get short just like you. everybody's very bearish. And generally, when everybody's bearish, I tend to think the other way, especially if you can get cheap options, because that's how you make the big money. If you follow everybody, generally, especially when they get this bearish this quickly, they tend to wait a long time. It is the proverbial pot that you're watching for to boil. Big for we'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, question out here from somebody. Don't know who it is or where they're from. So I'm going to say it is Jethro in Lutz, Florida, is asking about the Clorox company. Interesting test of the low, February 9th, 124.98, 2.7 million shares. You got into that with 1.5 million shares. It's now back into the trading range as of today. Volume has kind of remained light. So what you're really looking for now is how is this thing going to work in the move up. You've got this big gap down on the 2nd of February. What is the high of the day? 135.25. That starts that gap. You're in here about what, 127, 120, high 126s. That would be your trade. I think that you're probably going to see this thing go up to about 135, and it may take, a week or two to see that. Don't be surprised if this leg is very slow and deliberate on the way back higher. Okay, so looking at that, now we're off 17 points on the S&P cashes, and the NASDAQ's off, 124. So certainly getting a big roll in those NASDAQ stocks. Apple's right at 170 now. It's off that after it hit 175. So seeing a lot of people come back after this market, which is kind of interesting. But my guess is we're seeing a lot of people pile on short. We'll keep an eye on the rest of these here. Am I in there? Okay. So I think we're kind of close on a couple of other stocks I've been watching. Take a look at here. Okay. Anyway, is that it? That is it for the day. I'm run out of time. But you know what? I'm going to be here same time tomorrow. Same bat channel. Sell when you can, not when you have to. Also buy when you can, not when you have to. Don't chase. We'll be back tomorrow. Watch how this works today. It is
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.